My starting point is what do we mean by public sector? And is there any difference between public sector and private sector? Yes. Public sector refers to an organization put in place by the government in order to secure the interests of the citizen of a country. While private sector refers to private entity that is basically meant for profit making, while public sector is an organization set up purposely for protecting the interests of the citizen, that is refers to non-profit making organization. In this situation, it is very clear that the purpose of putting in place the public sector is for the government of a nation to be able to cater for the need of the citizen. Simply means they are meant to manage the resources of that nation. They are being empowered through the system called voting in order to be able to govern the affairs of the state. As a result of that, we can now look at it, what is public sector accounting and finance in a simple analysis. It is nothing but what the process of recording, communicating and summarizing, analyzing and interpreting the government financial statement. In another way, and we can say that public sector accounting is the process of recording, analyzing, and preparation of the financial reports in terms of the revenue and expenditure of the entire public being managed by the government for the purpose of taking decision. On this note, some things are meant to be clear to us. Some things are meant to be clear to us, that what is the purpose of government in the public sector? Why do we need public sector? Who are there to manage the public sector? Now, government, based on our past experience, we refer government as the machinery through which the will of the states are formulated and govern the affairs of a nation. Under this part, it is very clear to us that there is no way the government can be able to manage the affair of the nation without considering the public resources being put into their care. On that note, we can say it vividly that the government is meant to govern the affairs of the nation. The affair of the nation cannot only be managed without considering the inflow and the outflow, which means where there is responsibility, there must be what? Accountability. And this so-called what? This so-called government we are referring to, they are meant to manage the public resources. How do they manage the public resources? We are now meant to look at it. What are the functions of government? This so-called particular topic is a very versatile word. This so-called particular course is a very versatile course because it is 4-in-1. In this particular course, we are going to be seeing the elements of government, the element of economics, and at the same time, we are going to be seeing the element of accounting and the element of finance. And I will also advise you, if you are writing public sector, please also make sure you write your financial reporting along with it, because it's going to assist you a lot. All what you are going to discuss in your financial reporting, we're also meant to discuss it in what? Public sector accounting. All the standard, but we call it what? PSAF. Now, let me go back to where I'm coming from before I will be able to come up with what I wanted to come up with. Now, the role of government needs to be understood. We need to understand the role of government. Government as a body is basically divided into three in terms of the arms of government or organs of government. That determines the responsibility of the government. Looking at it from this part, we have under government, we have what we call executive arms of government, we have the legislative arms of government, and we have the judiciary arms of government. These are the three arms of government which will determine the functions of the government. Let's look at it from the executive point of view. The executive government is meant to look into some affairs. What are these particular affairs? Now, the first aspect I'm looking at is the macroeconomic objective of a nation. What are the macroeconomic objectives of a nation that executive arms of government must look inwardly into to be able to know their responsibility? Number one of that executive function is to implement law implementation. They are not meant to make law, but they are meant to implement the law. In the place of implementing the law, they are also meant to look at the economic affairs of that nation. Looking at economic affairs of the nation, there is what we call microeconomic objectives. If you can go back to secondary school days, there's what they call macro, there's what we call micro. Micro relates to what? Individual and the private entity. While when we talk of macro, we are talking of the aggregate, the entire nation, the need for the entire nation, and how the nation are meant to be satisfied. Now, in that situation, it is very clear that what are the microeconomic objectives of a nation that a country, a government of a nation must look into. Number one, there must be what? Equilibrium balance of payments. Equilibrium balance of payment. What do we mean by equilibrium balance of payment? That is, there are three ways in line with Keynesian theory. Keynesian theory. He told us vividly from his own framework, saying that there are basic three things that must be put in place when you are talking of what? Equilibrium balance of payments. Number one, import must equal to what? Exports. If a nation balance of payment is meant to balance in terms of what? Balance of trade. Import must equal to what? Export. If a nation is importing, it must also equal to their exports. Number two, government expenditure must equal to the tax they are collecting from the people. The tax they impose on the citizen, the total money they generated must also be spent on the citizen. That is when the economy will be balanced. And on the last note, he also make it clear to us that your investment of a nation must also equal to the savings of nation. He proved it to us, if you can still remember, one of those days where we have Y is equals to C plus I plus G. Y there is the national income. C there is the consumption. I there is investment. G there is government expenditure. When we look at it from another way now, he also proved it to us that this can also be expressed as Y is equals to C plus S plus G. The S there is savings. When he now proved it to us, when he managed to prove it to us, saying that Y is equals to C plus I is also equals to Y. Y is also equals to C plus G plus X. C will cancel C, and I will equals to X, or S equals to I. Simply means your savings is equals to your investment. All these are what will make the nation to have equilibrium balance of payment. A nation, a government of a nation must always manage to maintain equilibrium balance of payment. That one is very, very compulsory. Number two, to also maintain full employment. That is, government must provide employment opportunity. Full employment, that's another functions of what? Government under executive. Government must maintain full employment. Simply means government must provide full what? Employment opportunity to the citizen. Another one, government must also maintain stable price. The price of goods must be stable. Another one, government of a nation must also maintain stable economy. The economy of that nation must also be stable. The last one, but not the least, there must be what we call the redistribution of income. Income must be distributed among the citizens. That is, government will redistribute income by collecting tax from the citizen, by collecting more from the rich, and also to use to take care of the what? Of the poor. That is what we refer to as what? Redistribution of income. All these are what? Microeconomic objectives that a government of a nation must maintain and manage for them to achieve their aims and objectives. Aside that, it is also the duty of the executive government to also put in place what we call security. That is, they must protect lives and property. Government of a nation must be what? Ready to protect lives and properties. And they must also ready to protect the nation from the external attack. If I want to ask you guys, do we experience this in our country? Hello? Hello? All what I've explained so far, are we experiencing that in Nigeria?
Yes, sir.
Are we sure?
Yes.
We have stable price? Do we have stable price? Do they protect us against external attack?
No stable price, the economy. Not fully.
That's what I'm asking. These are the functions of government. At the executive what? The executive arms of government, these are their responsibility. Is there anything like full employment? Do we have employment in the nation?
Not
A
at
lot
all.
of people that are graduate are jobless. Now, we now look at it from another aspect, which is what? The legislative arms of government. Legislative arms of government, their own responsibility is to make law and constitution adjustments. They are meant to make law and also to adjust the constitution. The law that is not effective, that is not really functioning, they are meant to adjust it and the status of the nation. Who are now there to interpret? After this law has been made, then it is duty of the executive to implement that law. But for the understanding of those laws, then it is a duty of the judiciary to interpret the law. But all these are not being properly done as Nigeria Constitution is concerned. That's the first phase of what I've discussed. Now, the second phase of it is another aspect of government that we are looking at. There are various systems of government to be practiced by a nation, depending on the one that is meant to suit the nation. We have what we call confederalism system of government. We have what we call federalism system of government. We have unitary system of government. We've done unitary system of government in the past. We've done confederal system of government in the past. And presently, we are practicing what we call federalism system of government. When Nigeria was having what we call Northern Protectorate, Southern Protectorate, and when we have the Western Protectorate, all that is when we practice what we call confederalism system of government, where the central is weakened and the regional government are very stronger than the center. And that brings a lot of development into the system. But the central government are somehow weak compared to the other regional governments. They look at it that does not bring the government, government close to the people. Because it doesn't bring government close to the people, then they look at it, the best way to go about it is to bring on board federalism system of government. The federal system of government is a system of government where government power is being divided into two. That is, between the central government and the what? Regional government. That regional government is now, the central government is more stronger than the component or the regional what? Government. They now look at it, the best way to bring government close to the people is to find a way around it and bring local government. That was now being under the federal system of government. Government is being divided into 3 tiers what? Apart. We call it the federal, the state, and the local government. Those are the 3 tiers of government with their responsibility. Under the federal system of government, there are roles and responsibility to be played by the 3 tiers of government. At the federal level, they are meant to have what we call exclusive power. Exclusive power and exclusive what? Responsibility in terms of obligation. Under the exclusive list, we have it's the duty of the government to protect the state, the country against the external attack, that is, to provide security. Under the federalism system of government, the federal is responsible for the nation's what? Security. Number 2, they are meant to look into the power and energy. Number 3, it is responsibility of the federal government to also look into the health matter. It is the duty of the federal government also to look into what? The power, which I've made mention of, and also to consider what we call housing, works and housing. They are also meant to look into works and what? Housing. In terms of what? What is the condition, the accommodation, the living condition of the people? What is the cost of living? What is the standard of living? It is the duty of the federal government to also look into that in terms of per capita income of each individual in a nation. Now, looking at it, I believe you all have idea of what is per capita income is all about. What is national income is all about. What is GDP is all about. What is GMP is all about. All these are the components that make up what the government will look into to be able to know the standard of living of the nation and what is the cost of living of the nation. To be candid with you, our own per capita income here in Nigeria is not what really consistent, simply because we don't even know what is the total population is all about. We don't have record. We are only seeing what is coming in. We don't know what is going out. On that note, we move from there. It is also the duty of the government to look into the health matter, federal government. Then state government will also share the same burden. Not everything, but some certain areas are also meant to be paid by the state, which we call what? Concurrent list. State is meant to look into the concurrent list. Under the concurrent list, state is meant to look into education, while the also federal is also looking into education. That is why you see Federal Ministry of Education. You also see what State Ministry of what? Education. State is also meant to look into the health matter. Federal is also looking into the what? Health matter. That is why we have Ministry of Health. State will look into what? Works and housing. Federal is also meant to look into works and housing. All these are the responsibility of both federal and the states. State will only protect the lives and property within that state, not against the external attack. It is the duty of the federal to look into what? Protecting the nation against what? External attack. On this note, federal government is meant to look into what? Exclusive list. The state government is meant to look into what? Concurrent list. While the local government will look into residual list. Under that residual list, the responsibility of the local government has to go with what? Issuing of business permit, They can issue permit to people, the local government people that are selling things. They call it what? Lock up what? All this lock up shop. There's a what the local government are collecting from them. They issue bicycle license or riders what? License. They also meant to issue what we call birth certificate, death certificate. Their responsibility is also to name the street and to name the market. All these are the lists relating to the local government. Those ones I mentioned earlier relates to the state and what? Federal. This is what make up what we call government. This is what is make up what we call public. When we are talking of public sector. On that note, we can now move from there to importance or objective of public sector accounting. We've defined what is public sector accounting is all about. Then what are the importance or objective of public sector accounting to us? In a simple analysis, not to take all too far, it has to go with what we call planning and controlling, stewardship. We talk of legitimacy, comfortability, all these for measurement purposes, for planning and thereabout. But let's see what the book is talking about to us, not to just be explaining. What are the objectives of the public sector accounting? Ascertaining the legitimacy of the transaction, how transaction is being what? Legitimate, and the level of their compliance. That is what we call conformity, how they are related in terms of in the 3 tiers of what? Government. The evidence of stewardship, assist in the area of planning and controlling. For timely reports, it helps the government in the area of timely report. It helps the government in the area of what? Decision making. For appraisal what? Purposes, management appraisal in terms of efficiency, effectiveness, and economical. It helps in the area of what? Revenue, receivables, and expenditure. It helps the government. It also helps the government in the area of what? Appraising the capital project, whether the project is viable or is not viable. It also helps in the area of what? Economic efficiency in the organization as public sector is concerned. Then after this, we need to look at users of public sector accounting. Who are the users of public sector accounting? The users of public sector accounting divided into two. Users of public sector accounting basically divided into two. We have the internal users, we have the external users. The internal users are those who make use of public sector information, accounting information within the organization. Mr. President is part of what? Under the internal users, which is the head of the executive. All the ministers, all the cabinet, that is what we call minister, what do you call it? The presidential cabinet. The presidential cabinet refers to the ministers who make up the what? The ministry for the president. They are also meant to look into this matter for them to be able to get to the next level. Aside that, we also talked about what? The administrators, the directors of the organization. We have many directors as public sector is concerned at each ministry. They are also meant to look into all this. The permanent secretary, all those ones, they are internal users. We talk of the executive governor, executive chairman of local government, the councillors. All those ones, they are what? Internal users. Then the labor what? Union in the public sector. Labor union in the public what? Sector. But on a good day, we're supposed to say that the labor union should be under pressure group. But looking at it, they assume that those people are still working like a cooperative within the ministry. Those ones, they look at them as what? Union. All the parastatals, the public enterprise put in place by the government, the agencies, they are under the internal users. Any other question on this part before we move to the next level? Hello?
Nothing, sir.
Should we continue?
Yes, sir.
Okay. Now, when we talk of the external users are those who make use of what? Public sector accounting information outside the organization. Where does Accountant General falls? Accountant General of the Federation, is it internal user or external users?
Internal user.
Accountant General should fall under internal users. Auditor General for the Federation, that one is what? External, because that one reports directly to the what? National Assembly. Now, National Assembly, House of Rep, they are external users. Are we together? Then, when it comes to the financial houses, both at the local level, at international level, they are also external users. In terms of IMF, World Bank, HIDA, all those ones, they are what? External users. They seek for your information, for your financial information, to be able to assess whether you are eligible for this or for that. Those ones are referred to as external users. The researchers, they are external users. The pressure groups are external users.
Wow, with you, sir.
Okay. All these political parties, the trade union, thereabout, all those ones, they are also what? External users, as I've made mention of. Now, the next one, the importance of public sector accounting information to the users. What do they use? What are they meant to use those words information for? They normally use to assess a nation, whether they are in terms of budget, in terms of the level where they are, whether they can give them loan for the external level, whether the loan can be given to them or the loan cannot be given. All those ones relates to the reason why they are meant to be assessed. If they assess them, then they know they are qualified for this. In terms of their level of compliance, then they can give them the loan. You can see that Nigeria has been seeking for loans for some years. They said they are not qualified, this and that. They've collected this, they've done that. They are not doing this, they are not doing that. Simply because those things are not what available. But where in terms of consistency, in terms of the quality of what they expect from them, if they can do it the way they're supposed to do it, then such will be given to them. They normally use those information to assess the nation for a particular purpose. Why government is using it in terms of what I'm referring to the external user, for them to be able to prepare budgets, for them to be able to bring on board standards, for them to be able to put in place policy, for them to be able to come up with likely revenue, to be able to enable them to cater for the public expenditure in the future. Those are the reasons for the internal users. In terms of efficiency, in terms of effectiveness, in terms of economic factor, government are meant to look into the what? The accounting information in the public sector, whether they can use those things. They compare the projected with the actual. The variance, they can be able to know what brings about the variance. What can we do to resolve this particular problem in order not to occur in future? To safeguard the assets of the public and also to protect the interests of the citizen. Now let's read what the book is talking about. The internal user required accounting information in order to assess the various levels of regulatory compliance and whether actual expenditure is in accordance with the budget, which is part of what we have made mention of. They also like to ascertain whether or not adequate safeguards are available for the protection of the public resources. Simply means it is the duty of the government to protect the resources of the nation. Conversely, The external users require the accounting information to ascertain the financial viability of the public sector organization and efficiency and effectiveness in management. It doesn't differ from what we have explained so far. In terms of consistency, in terms of transparency, accounting information in the public sector, how do we get the information and how do we utilize the information? That is our major concern. That's where we stop before the network's interruption came on board. Now, looking at it holistically from that aspect, as a public sector is concerned, our primary source through which we can get information is from the Nigeria Constitution. Nigeria Constitution. That's the primary source of getting information from. And now set aside that there are arts. In those arts, there are things we need to have a better understanding of. What are those things we are referring to? The number one, we talk of financial arts. That one is telling us the roles and responsibility, the sources of government revenue, the roles and responsibility of the finance officer in the public sector, the sources of government revenue, the books of account to be put in place. That is what that finance is referring to. Everything that has to do with what finance is under the finance act. And if you look at it, based on the current situation, this finance act is meant to be amended day in, day out, depend on the situation on ground and what the government thinks is more appropriate. Under the Finance Act now, you can see that they've been adjusting the VAT. The rate of VAT has been in adjustment from 5% to 7.5. From 7.5, they talk about 10% to 12.5, that they are going to be adjusting it like that. That is the purpose of that Finance Act. We also have what we call the Audit Ordinance, 1956. That's another source of information. The procedure to be carried out by the Accountant General of the Federation in terms of what? Cost checking, examining, investigating all the financial transactions that has been carried out in the office of the Accountant General. He has the right to do that. We have what we call Financial Regulation Act. It's giving us the responsibility, the roles of the ministers, especially in the finance work ministry. What are their responsibilities? We also have what we call the Finance Circular. We have what we call Public Procurement Act. What they are going to follow in procuring an asset. All these are the source of what? Information in the public sector. We also have what we call Fiscal Responsibility Act. This act provides for the prudent management of the national resources, how the resources of a nation is meant to be managed. About this in terms of transparent borrowing, public debt management, all these are meant to be listed under the what? Public Fiscal Responsibility Act. And if we go by this, it is the duty of a nation to prepare a budget annually. When they prepare the budget, there are other things to be taken into consideration when it comes to what? When we talk about what? Cash basis, accrual basis, we talk of modified cash basis, modified accrual basis, and there's what we call commitment basis. Under commitment basis, no nation is meant to spend any money from the public fund without budget. That is the purpose of commitment basis. That is, any activity to be carried out in the public sector, any activity to be carried out in the public sector must be clearly stated in the budget. And that doesn't appear in the budget, they must not spend public money on that. But that one is not applicable in Nigeria. A lot of things that they don't even, doesn't form part of the budget that we are spending money on. So it has been approved. It has been approved because we are using rubber stamp. Nobody's to query the other person. But all this, apart from that, in terms of what monitoring, we can look at it. We have what we call the Order Guiding Public Sector Accounting and Finance Order Law, in terms of what money laundering, in terms of what Pension Reform Act, in terms of, we also have what we call Independent Corrupt Parties ICPC Act. We have ESCC Act. All these are part of the Act, the Code of Conduct of Bureau and Tribunal Act, Money Laundering Act. All these are the Act through which we can generate information from, in order to know what to do, in order to know the policy to govern. Now, I want to ask a question. There is what we call contractionary monetary policy, contractionary fiscal policy, expansionary monetary policy, contractionary monetary policy. What do we mean? When they made mention of that, they say you should explain. What do they mean? Hello? Hello? Any idea? When we talk of contractionary monetary policy, expansionary monetary policy, or fiscal policy, or what is there any difference between the fiscal policy and monetary policy? Hello?
Yes, hello.
I'm with you. You can talk. You are free to talk. Let's make the class to be a lively class.
Yes, there is difference between, there is, good evening, sir. My name is Taiwo. So there is difference between fiscal policy and monetary policy.
Thank you. What are the likely differences you have idea of? No idea, Abi? No idea? Now, there is difference between the monetary policy and fiscal policy. Both are the policies to be adopted by the government to regulate the economy of a nation. Governments are meant to use both monetary policy and fiscal policy to regulate the economic activity of a nation. These are instruments to be used by the government to regulate the economic activity. Now, monetary policy is meant to be used by the government through central bank to regulate the volumes of money in circulation and the inflationary rates. Federal government will use central bank to regulate the economic activities and the inflationary rate using CBN to reduce the total money in circulation if there's too much money. If there is higher inflation, too much money in circulation, government can use what? CBN as a yardstick to control the economic situation. While on the other hand, there are numerous instruments to be used by central bank to regulate that. What are those instruments? One, they can use open market operation, OMO. Open market operation, OMO. They can use it to regulate the money, total money in circulation and the economic activity. Two, they can use moral suasion. They can use discount what? Bank rate. They can use special information. They can use what we call cash liquidity ratio or legal ratio. All these are the instruments to be used by central bank to regulate the economic activity. While when it comes to fiscal policy, that's one, government is meant to regulate the economy activity using the following instruments by the federal government. They will control the what? The trading activity. They will reduce the acts of dumping in a nation. They can put embargo or penalizing people moving the unauthorized goods into the nation. They can close the border. They can use tax holiday. All these are the instruments to be used by federal government to regulate the economic activity. Tax holiday, try to support the infant industry, try to place embargo or bans on some products that are not meant to be what? They can now, there is what we call export promotion. Government can support export, that they can encourage people to export their goods out of the country in order to make more money. They can put in place what we call anti-dumping acts to be able to reduce the rate of dumping in the nation. All these are under fiscal policy. Take notes. To regulate the activity of a nation. Now, the next one after the source of information, then the next one is what we call basis of public sector accounting. What are the bases? Basis of public sector accounting. There are different bases through which we can put in place accounting treatment in the public sector and recognition. We have what we call cash basis, we have what we call accrual basis, we have what we call modified cash basis, we have what we call modified accrual basis, and we have what we call commitment basis. We have budget what? Budgetary hats. But the major ones are five. The first one that we call cash basis, what do we mean? These are the things I'm talking about. Look at them. Cash basis, accrual basis, commitment basis, modified cash basis, modified accrual basis. These are the bases. What do we mean by cash basis? Cash basis is one of the accounting bases that put in place recognition for revenue when cash is received and expenditure when card payment is made. Recognition of revenue when cash is received, cash, and recognition of expenditure when cash is being paid. That is cash basis. Simply means only cash transactions are recognized, no credit transaction when it comes to cash basis. Let's see what the note is talking about. It is the basis of accounting under which revenue is recorded only when cash is received and expenditure recognized only when cash is paid. Irrespective of these facts, the transaction might have occurred in the previous accounting period. Non-accountants such as general manager of government corporations, police superintendents are called upon to perform some accounting duty or supervise bookkeeping work, such as this and that. But what we are, all this one, they are just take note. What are the things you need to have idea of when it comes to cash basis? Cash basis will only take on board only when cash is what? Received as revenue. You recognize revenue, you recorded revenue only when cash is what? Received. And expenditure only when cash is paid. Simply means only cash transaction is recorded. And this accounting basis is the most simplest accounting basis. It's not too technical. It eliminates the issue of debtors or creditors. It eliminates bad debt. There's nothing like provision for bad debt. It permits easy identification of those who are authorized payments and collection of revenue. It allows for comparison between the amount provided in the budget and the actual spend. It saves time, easy to operate. Easy to understand. Very simple to understand. Those are the advantages of cash basis. What are disadvantages? It takes unrealistic view. It is not realistic in nature. All transaction cannot be cash. It's not possible. There is no provision for depreciation of assets. There's no provision for what? For bad debts. Cash basis cannot be used in the economic decision as it tends to hide basic information. For example, it means information relating to fixed assets, debtors. When you are operating cash basis, we are not meant to recognize fixed assets, no debtors, no creditors in our books. It doesn't work out. It's not applicable to matching concepts. These are disadvantages of cash basis. Then, as modified cash basis is concerned, under this basis, the book of accounting are left open for maximum of 3 months after the end of the year, so to amount, income, and expenditure relating to the year ended. Now, you might not have a better understanding of this one here, but let me explain better. In this scenario, modified cash basis is giving us the opportunity to operate using accrual basis in order to receive those transactions that are on credit before the closing of the book. In this scenario, expenditure will be done on cash basis, while revenue will be recognized on accrual basis. Those revenue that are hanging out, then they are meant to recognize them on accrual basis. Simply means we have the element of what? Accrual basis in the modified cash basis to be able to receive those monies that are hanging out. What? Either the taxpayers or those who have what? We have engaged in credit facilities with them. Accrual basis is another accounting what? Basis that recognize the what? Recognition of revenue when it's earned and expenditure when it is being incurred. When we earn the revenue, that is when we recognize this under the accrual basis. And that is the basis they are using in the private sector to prepare their accounts. In this scenario, there is element of credit what? Facilities. Now, let's read what the book is talking about. Under this basis, revenue is recorded when earned and expenditure acknowledged as liability when known or benefit received or notwithstanding the fact that is received or payment of the cash has taken place wholly or partly in the accounting period. Simply means we have the element of cash, we have the element of what? Accrual. Credit transactions. We are meant to recognize them when it comes to what? Accrual basis. Accrual basis is the sector, which I've said that, and all parastatals such as what? PSAF, that is Power Holding Company of Nigeria, and the Customs Service, there is element of accrual in what they are doing. And reasons for this is that private sector concerned as profit-oriented organization, profit-making organization. That is private sector. But in the public, they always look at it that cash must also always come on board. It's only cash public always recognize. But because of the what? Public sector, international public sector accounting standard has now legalized that we can prepare our financial statement in the public sector using accrual basis, which will go along with what they are using in the private sector. We are going to discuss that when we get there, when we discuss IPSA 1 and thereabout. What are the advantages of this? It takes realistic view of the financial transaction, yes, because all transaction cannot be in cash. There is going to be some transactions that are going to be in credit. It reveals the accurate picture of the state of affairs of the account at the end of the period. Because when when some money are hanging out and you are not putting them in the books, it doesn't show true what it doesn't show the true picture of your transactions because you are using cash basis. But when you use Akura basis, you will state or you will tell us the one you have received as cash, and you will tell us the one you are having outside as credit that you are meant to receive in the future, which will serve as assets to the organization. On the other note, we also have what we call alignment in terms of what matching concept in the public sector. That is what we call matching concept. It makes allowance of the diminution in the value of assets. That what we mean by diminution is what depreciation. That is, it creates depreciation, account for depreciation as the value of asset is concerned. When you acquire an asset, is when you are meant to spread the asset for a number of years. Accurate basis creates provision for that. Then what are the disadvantages of this? It is very difficult to understand. Yes, because it's very technical. There's a lot of technicality in that. In terms of what we call aging debtor analysis, you need to analyze the debtor's age. In terms of keeping records of debtors, keeping record of what? Of creditors, those who you have purchased goods on credit from, those that have sold goods to on credit. All these are meant to also be recognized. It doesn't permit easy delegation. You cannot delegate work to anybody anyhow when it comes to Akura basis. But cash basis, because I'm expecting you to collect cash, I can give you, hey, okay, go and collect the money from me and put it there. You have done the work. But when it comes to what? Akura basis, you cannot just give the work because some people are meant to even collect the money without reporting it. It is not a principle or system that is very easy to operate. It's very technical. Another way that is also an advantage, it gives a room for an organization to train the future accountant through the available records. They can manage to go through the record they are put in place to be able to know those expenses and the likely income and the procedure they are meant to follow to do the same thing in terms of accounting treatment for those transactions. The record can be used as a manual to guide them. Modified Akura basis. This is the basis under which revenue is recorded when received and not earned. In this scenario, revenue is meant to be recognized under modified Akura basis. They are meant to recognize revenue as what? Cash. While expenditure will be recognized as what? As Akura basis under this part, which is opposite of the what? Modified cash basis. That is giving room for accrued what? Revenue. Revenue accrued. There is a room for that under modified cash basis. But here, we assume that all revenue must be recorded on cash basis, while expenditure will be recorded on Akura basis. Except the subsidious one. Okay? Commitment basis. What does commitment basis mean? Now, this is another basis that take into consideration only the budgetary activity in the accounting system before spending can take on board. Let's see what the book is talking about. It is the basis that recorded anticipated expenditure evidence. Anticipated. What you have budgeted for. That is the expenditure you can what you can expect expenditure on. by contracts or purchase order in the public finance, budgetary, and accounting system as closely related to the commitment basis. This is another aspect. What this one is giving to you is giving you separate for payment. It's also giving room for financial control. It's putting in place what we call internal control in terms of budget preparation and in terms of public spending. You don't just spend money anyhow. It takes a realistic view as accounting transactions are concerned. It involves a lot of what? Extra work to do that. A lot of monitoring, commitment. Those are disadvantages of that. You can see more of that. Then comparison of the public sector and the what? Private sector. What is the objective? Objective of public sector and private sector. Private sector is said to be what? Profit-making organization. Profit-making organization, and they are profit-oriented in nature. As a result of that, their marginal cost is always equal to marginal revenue as private sector is concerned. But when it comes to what? Public sector, it is non-profit making organization, and their marginal cost must always equal to zero because it is not a profit-oriented organization. Let's see what the book is talking about. The main objective of commercial enterprise is to maximize profit, while that of the government is to provide adequate welfare for the citizens. When we look at it from the revenue of the government, the source of government revenue is basically tax and fines. While in the private sector, their source of what? Revenue is sales or the capital provision when they provide capital for the owner of the company. That's another one. Public sector consider cash basis. The basis that they are meant to be used in the public sector is cash basis. While in the private sector, they use accrual basis. We also look at it, management. In the public sector, government referred to as the management in the public sector. While in the private sector, the management in the private sector is referred to as what? Board of what? Directors. Board of directors are responsible for the managing of the organization. Ownership. Who are the ownership of the what? Ownership of the private sector and the public sector. Ownership of the private sector. Ownership of private sector. Said to be the shareholders. Said to be what? The shareholders. Why the ownership of the public sector referred to be what? Taxpayers. Standard. In the public sector, we use International Public Sector Accounting Standard. International Public Sector Accounting Standard. While in the private sector, we use what we call International Financial Reporting Standard and International Accounting Standard in terms of accounting what standard. All these are what we are meant to know in the public what sector, as the difference between the public sector and the private sector. Then accounting concepts. As accounting concept is concerned, we have what we call entity concept, going concern, dual concept. We have what we call periodicity, monetary, historical, accrual, and matching concepts. Matching and accrual are not applicable in the public what sector. But the government is different from the what? In terms of entity, it simply means that the government is different from the organization. That is entity. The owner of the business is different from the business. Government is not the what? The owner of the business. They are only there to manage what? The business. And public sector must always be a going concern. They must never in a way to liquidate the public what sector. Dual concept. Dual concept means accounting transaction in the public sector must have what? The debit side and the credit side. Using the golden rule principle that says what? For every debit entry, there must be a corresponding credit entry. Periodicity concept that defines the accounting year in the public sector. The accounting year in the public sector. Monetary concept. All transactions must be in the public sector must be expressed in monetary terms. Historical costs. All these are part of what accounting concept in the private sector that we have idea of. Then when it comes to what accounting convention, we have what we call fairness, which is the objectivity. Accountant must be what objective in terms of decision to be taken. Consistency. Accountant must be consistent in terms of what accounting what principles, accounting method. What you have selected is what you are meant to use. So substance over form. It means reality over what? Legality. Reality over legality. Reality over legality. An accountant in the public sector must always consider the transaction that is legal and also what economical before taking decision. The next one is what? Materiality. How material is this particular what transaction to be disclosed in the financial report? The non-material might not be what disclosed in terms of what accounting policy. These are the summary of the chapter 1 of public sector accounting. Any question?